All right, we're going to get started with Chapter 10, which is Lesson 10.1, and accounting for sales on account. So we previously did accounting for merchandise on account, and so now we're going to flip that and we're going to do it to sales to our customers on account. So learning objective 1 is to explain the relationship between the accounts receivable ledger and its controlling account. And then the second one is to record sales on account using a sales journal. So subledgers and controlling accounts, the amount of business received from the sale of an item of merchandise is called the selling price. So how much we sell the item for. The amount of business adds to the cost of merchandise to establish the selling price is called the markup. Okay, so we buy our merchandise from a vendor, and then in order to make money, we need to mark up the price. So we might do that by a percentage, it might be an amount, depends on the business and what they decide. So say I bought something from the vendor for $10 and I need to mark it up 50% because I want to make a profit of that. So if I marked it up 15%, that'd be $5 of a markup, and then my selling price, what I'm going to sell to the customers, is $15. So that's kind of how that one works together. An accounts receivable ledger is the subledger containing all accounts for charged customers. So whenever a customer buys something from us on account, we're going to use our accounts receivable ledger, this subledger now. Just like we did the accounts payable before when we would buy things, now we're going to flip it into when we sell things on account. So this is that visual again. We saw this in the last chapter with the accounts payable ledger, but all of these are our customer accounts. So people that have bought things from us on account. And when all of these total up, it's going to equal that accounts receivable, which is our controlling account in the general ledger. These two numbers should equal each other. So we're recording all of these in that accounts receivable ledger, and it should match the controlling account of accounts receivable. Okay, so an example here, now you'll see we have customer, which is Skinner College, and then customer number. Before we had a vendor and a vendor number, but because we are selling to our customers now, that's how this is going to look a little bit different. We will see that we have the same column headings, and then the one other difference now is that we should have a debit balance instead of a credit balance like we did in our accounts payable information. So people owe us money. We've already provided them their goods that we sold them. So that is why it is a debit. It's looked at as if we will receive that money. And so it's a debit, it's an asset. And so that's why it has a debit balance. You shouldn't ever have a credit balance in this. That would mean that they overpaid us. Account name, account number, and that should say customer name, customer number, date. And this is just showing us how we recorded at the beginning, the balance. Check mark just means again that I'm not going to post anything. And the balance. Then we have to deal with these things of sales tax when we sell things to our customers. So a tax on a sale of merchandise or services is called a sales tax. Sales tax is collected by merchandisers on behalf of the state and then sometimes the city, and is therefore not the property of the merchandiser. So instead of just collecting or showing that they're paying us the sales tax, we keep track of it separately because we will have to pay that back to the state or the city later. And so we need to keep that in a separate area so that we know how much is going towards sales tax, and we put it aside until we need to pay it back later. So because sales tax is ultimately payable to the state, city, taxes are collected from customers and is recorded in a liability account called sales tax payable. So yes, we are collecting that from our customer, but we are going to owe that money to the state or city. So that is a liability. Okay, so then we move into another special journal, which is our sales journal. This is a special journal used to record only sales of merchandise on account. So whenever we sell our merchandise to a customer on account, we're going to use that sales journal. Just like we had our purchases journal, now we have the sales journal. Okay, so these are the headings. It's very similar. We now have accounts receivable because it's a customer buying from us, a sales credit, and then we have the sales tax payable credit. So we have these three special amount columns in our journal. So most of the time when we have a accounts receivable thing happen here or a customer buys from us, it's going to be off of a sales invoice. So it has the information on here. You know, this is our company, 3 Green Products. We have the sales invoice, the date, customer ID, so that customer number, and then terms of sale, if we remember that 2/10, so 2% discount if it's paid within 10 days, it's due in 30 days. And then it has the name of the organization or customer that's buying from us, what they're buying, description, unit price, line total, and then you'll see we also have that sales tax here. So subtotal, sales tax, and then the full total. So these are the 3 numbers that I would work off of for making a journal entry. So November merchandise on account to Wells Apartments, $454.50 plus sales tax of $27.27, which is a total of $481.77. Sales invoice number 498. A lot of times that will just say S498, and that tells me that an S is a sale. It's going to go in my sales journal whenever it's on account. Okay, so what's going to happen here is our accounts receivable, so the full total amount that the customer owes is going to be debited to accounts receivable. It's going to be credited to sales, just the amount of what we are charging for our merchandise is going to be credited to sales, and then that sales tax payable is going to be credited again because it is a liability. So my 2 credits here should equal my 1 debit of accounts receivable. So we have the date, customer name. Remember, because we have the accounts receivable title here, we do not need to put accounts receivable to Wells Apartments. It's just the name here because it's already listed in the special amount column. Our sales invoice number, remember we do not need the S because it's titled here, sale number. Total amount owed by customer, the sales, what we are charging for our merchandise, and then the sales tax payable credit. Okay, we will begin the work together here in the next video.